It's good to have you guys. Thanks for having me today. How many of you have done ground up development? Any of you?
We do have a few. I don't know how many you can see, but
Okay. One of the biggest mistakes people make in ground up development is they don't question anything. They just run something by a planning and development department, or they just take what their engineer gives them and they just think, okay, this is it. It's the best I can do. It's all we got. There's no other way. You always want to question everything. Always review the planning code language for yourself so that you know what it says, because a lot of times it's left up to interpretation and you can help them reinterpret it for different reasons and for different things. So that's just one example where the engineers have been working on that project for, I don't know, a couple of years for another developer. Nobody ever questioned, is this the best possible way to go about this? Do I have to spend all this money on this retaining wall? Is there anything else I can do? I took one look at it. I'm like, why don't you just buy that? And then you don't have to do the wall, and then you'll get a bunch of extra units, and it's really that simple. So again, it sounds simple, 30 years of experience, wrapped up in one phone call, but always question every assumption, never assume anything, always review the data for yourself. If somebody tells you you can't do something, ask them why and say, where is the reference? Where can I look in the code for that ruling to tell me, what I can and can't do? Anyways, that's one of the biggest things that people get tripped up on. Real estate development is very technical, and there's a lot of tripwires out there. But I don't know if Simon told you about his journey, but I guess you guys have looked at some of his projects. Simon, how many projects have you done and do you have going right now total? Like, we added everything up?
we've got close to 1,000 doors currently under different parts of development, and that'll be about 300 to 350 million by the time all those are done. But Peter keeps filling the pipeline, so I'm getting
10 to 12 projects overall?
Yeah,
About 350 million?
correct.
Okay. So just so you guys get some perspective of what's possible, Simon started with me in May of 2021, and he'd never done ground up development before. Not one project. He'd done build outs. He was a general contractor. He did fit ups and build outs for dental offices. So he knew building a little bit, but ground up development and land development, it's a whole different ballgame. So just in a few short years, through the pandemic, in one of the worst lending environments we've ever seen, with the highest interest rates that probably any of you have seen. When I got started, interest rates were 9-10%. That was good for construction loans. He's managed to pull this off with ground up development. And the way he did it was three things, right? So number one, you need deals. Number two, you need the capital. And number three, you need the expertise. That's what real estate development is all about. That's what any real estate investing business is all about. You got to have one of those three things. You can have one, you can have two, you can have all three. He had two. He had some deals and he had the capital, but he didn't have the expertise how to pull it off. So he found me and we got together, and I've kind of walked with him on this journey. But just in a few short years, that's what was possible. Now, he's highly educated, extremely intelligent. He was already a builder, already doing it. When I started in 1997, I'd never built a thing. I was a remodeling handyman contractor. And within 7 years, I did $250 million in real estate development deals using my own money. No investors, nothing, just me, myself, the bank. I started a little remodeling company, built it into a $30 million building company, sold it 7 years later. That was 97 to 05. And then I went on from there and just did all kinds of stuff. So, a lot and I didn't go to college. I had no formal training. Nobody in my family were entrepreneurs. I was just a regular guy that joined the Navy right out of high school. I worked restaurants, and on the side, I was a construction helper, and that's kind of how I learned the business and the trades on the way up. So there are no limits and there are no limitations. And you can do this as fast as you want, or you can do it as slow as you want and go as big as you want, or you can go small. But the key is you got to go. You got to start somewhere with something. In May of 2021, Simon called me up, said, "Hey, I've never built anything ground up. I think you were going to the bank or something." And they said, "Hey, there's this project across the street this developer client of ours wants to sell. Are you interested?" So he calls me up, and then I walk him through the whole process of putting it under contract and developing it out. And then he just took the ball and ran with it from there. So that's my long story short. And I just wanted to open your eyes to what's possible, and also kind of give you some things to watch out for along the way.
Excellent. Thank you so much for that, Greg. What questions do we have? Who's going first? Come on, don't be shy. I knew it was going to be you, Jim. I was actually just starting walking over.
I'm sorry I asked too many questions. So Greg, one question. Let's say if when we buy the land, we look at the land 3 acres, 6 acres, or 10 acres, how to visualize? I mean, I'm looking for more from the perspective of commercial retail. How to visualize like what can possibly go into that lot or something like medical, dental, drive-throughs or daycare. How to start the visualizing process in the beginning?
Okay. So vision is huge and it's important. And I'm glad you talked about vision because as a developer, that's what you are. You're a visionary. You have this empty piece of land and you see your finished product with the user, the end user enjoying what you've done and the impact it makes on the community. Rule number two, the second worst thing, well, this is rule number one in real estate development. Actually, you never close on a piece of property until you get all of your entitlements and permits. Never, ever, ever buy a piece of land until you get all of your entitlements, all your permits, so you're ready to break ground. Um, there are some exceptions if you're in a very competitive environment, unique situation, and worst case scenario, you can do something to where you're going to protect your value. But even then, avoid closing on land until you get all of your permits so that you can build what you want to build, what you think you can build, and what your initial feasibility study period tells you can build. Back to your question, you're talking about highest and best use. So highest and best use, number one, if you don't know, you can hire an appraiser, an MAI appraiser, Master Institute of Appraisers. You always want an MAI appraiser for commercial appraisals. That's what banks make you get. But as a real estate developer, you can hire an appraiser to give you a highest and best use study. And what they will do is they will go out and they'll look at the area. They'll look at, okay, where's the land? What is the topography? What is it surrounded by? What is this community missing? What does it need? Does it need a dental office, doctor office? Does it need a coffee shop? Does it need a Chipotle? What are the needs of this community? What do the demographics look like? What do the incomes look like? If you want to build a gas station for Wawa and lease it out to them, well, they need a certain traffic count. They need a certain income and they need a certain amount of population or a CVS or Starbucks, Chipotle, hair cuttery, Pets Plus, whatever. Any of those types of uses, medical, dental, professional, office, whatever it's going to be, co-working space, all of those factors come into play. Does it need to be apartments? Does it need to be self-storage? So you always look at number one, the demographics. What's your population base around it? Number two, what's the income levels around it? Number three, what is needed in the area? Will the area absorb the space that you're looking to bring online, whether it's commercial or residential? It could be housing, it could be commercial space. And again, you can get this information formally from an appraiser. You can talk to commercial real estate brokers, not the listing broker because they want to sell you the property, but other people that represent tenants. You want tenant representation if it's office, retail, medical, dental, whatever. People that rep those clients. Hey, do you have anybody looking for space over in this area? What are they paying? What are the going rates? Commercial brokers are a great network to have in terms of what's needed where. You can also look at, the planning departments. Generally, most cities and counties have a website where they have projects that are coming online and projects that are in the approval process. So you can kind of see what's coming and what kind of, um, you know, uh, capacity is coming online that you're going to, make sure that you have the absorption rates that you're going to need for that. Um, so those are just some of the ways. There's always networking groups of real estate developers and, development, economic development, committees that meet in your areas that you can go and start networking with people and kind of get an idea of what's going on. But at the end of the day, you got to have the population, you got to have the demographics, you got to have the traffic counts. Not every development is right for every property, and not every property is right for every development. So don't try to get this grandiose vision that, hey, I've always wanted to do this thing, and I'm just going to find any piece of land and do it. That's where you go wrong. What you want to do is you want to find what the demand is, and you want to fill that demand, right? So if you're a restaurateur, you want to go where you've got the hungriest population, right? If I said, hey, I'll give you two restaurants, one, you can have the best product in the world, or two, you can have the highest traffic count. Which one are you going to take? You're going to take the highest traffic count because if you've got a hungry audience, you can sell them whatever you got. So always remember that. Find the demand and fill that demand.
Hey, guys. Greg, is this two mic thing giving you a lot of feedback?
No, I'm not getting any.
Okay, perfect.
Hi, Greg.
How you doing?
So good. So you said there were three components. The component that I wanted to talk about was the capital component.
I find that if you really want to scale, you've got to have a lot of capital. So you finance a lot of stuff yourself. I find that to be not a viable growth strategy. So what is your, there's a lot of capital raisers out there, everyone who promises they can raise capital for you, but you only know so many people, you only have so many friends, and I don't particularly go to family for anything. I think that's a place where I don't want to go, even though people suggest it. So I wanted to hear your perspective on that.
Yeah, so I'm with you. I always recommend never do business or take money from friends and family ever, unless you don't want to have them around, because if it goes south, they're not going to be around. But I've always avoided friends and family and never gone down that route. I had good cash flow businesses, so my whole thing was build businesses that generate cash flow to invest in real estate, and then I leveraged the real estate, pulled my cash out tax free, and then kept compounding from there. That's how I did it. But if you're not in that position, you want to raise capital from retail accredited investors. I always recommend go accredited only. If you can avoid non-accredited investors, that's going to get easier for people to get accredited. There's a test that they're going to be able to take to be able to become accredited. It's not like a sophisticated test. But the bottom line is I recommend always raise from accredited investors, but it's like anything else. It's a contact sport. So if you want to raise capital and your network is limited, you have to expand your network. So how do you do that? So the best ways, well, first and foremost, you need to be an expert, right? So you need to be an expert in what it is you're raising capital for, because you need to instill confidence in potential investors that you know what you're doing, or you're partnering with Simon, and Simon obviously knows what he's doing. He's got a track record, so you're raising capital for him. So you got to have an expertise component, and then you want to get out there and you want to create that accredited investor funnel, right? So just like any other funnel, whether you're looking for deals, opportunities, whatever, raising capital is a contact sport. You need more people into your pipeline to communicate with on a regular basis. And, the best way to do that is to have a accredited investor funnel. And that's where you have an investor portal where people can land on your website. They can sign up and register to participate with you in your projects. They can see whatever deals you're working on or who you're partnering with, get more information, and then you pre-qualify them. Are you accredited? How much money do you have to invest? When are you looking to place the capital? What's your time frame? That kind of thing. So you kind of get an idea of where they're at. And then you got to get out there and you got to meet people. And there's several ways to meet people. One to many is the best way to do it. You can have one-on-one meetings, but that's going to take you a long time. One to many is the best way to do it. You can get yourself booked on podcasts. All the podcasts out there are always looking for guests to get yourself booked on, and that way you can tell people about what you're doing and the opportunities you have. People are looking for good operators to invest in. I get that question all the time. If any of you are ever on Bigger Pockets, you see that question all the time. How do I find a good sponsor to invest in? You guys are what's called sponsors. If you're developing a project or you're buying a property, you're the sponsor of that deal, the general partner. That is a huge need out there, especially right now, because a lot of deals have gone south over the last few years with interest rates rising like they have. So people have money, they want to put it to work. They know real estate's a good place. They like the tax advantages, and they want good sponsors. So you got to get yourself in front of people who are hungry. Bigger Pockets is a good place to network, and just kind of, share your knowledge and expertise, and people will reach out to you. Hey, I'd love to invest with you. You can't like promote and solicit, but you can share your experience, what you're doing, things like that, and people will reach out. That's time consuming. Podcasts are easy because you get on big podcasts and they've got a big audience. Going to investor conferences and speaking, again, you're an expert at something. These conferences are always looking for good speakers, like Simon today. He lined up all these speakers for you guys. Any one of you could have been a speaker showing what you were doing and raised money from somebody in that group, if not all of you right now today. So these types of things, having yourself, your own YouTube channel and podcast, it's really easy to get that started, and sharing what you're doing, kind of like Simon does with his project. If you look at my YouTube channel, sharing my knowledge and expertise of what I've learned over the years. So you have to market. And then finally, there are services out there. Simon can tell you about a connection that, I recommend all my clients, that has a system where they'll do it for you. So what they'll do is they'll help you create all of your stuff, all of your scripts, all of your ads, all of that, to run Facebook ads and Instagram ads and even, YouTube ads, and drive traffic to your funnel. So at the end of the day, it's a funnel. So you got to drive traffic somehow, either showing up and appearing in person, or you got to spend some money and run ads. And these companies have, KPIs, so they can tell you for X amount of dollars you spend, it'll bring X amount of dollars into your pipeline. So, that's really how you do it. But at the end of the day, first and foremost, you've got to be an expert, or you got to partner with an expert so that people know that you're competent and capable and you're a safe bet for their money, as safe as it can be.
So Greg made that sound very easy, but some of the people that he's coached through this, if you guys have heard the names, Joe Fairless. No, Ashcroft Capital, 3 billion under management. That's one of Greg's students. How about Vikram Raya?
Yeah, he was at 500 million when we started together.
So now he's over 1 billion. Black
Three,
Swan,
yeah, 2 or 3, something like that.
2 or 3 billion. Black Swan Capital, Eileen, she's one of Greg's mentees and one of my peers mentees. Well, she's almost at 1 billion. So it's an absolutely important thing to have because these projects don't go without cash. So great question.
You could also do joint ventures and things like that, but if you need to raise a lot of capital from a lot of investors, that portal is the way to go. Investor funnel.
Greg, thanks for this. Actually, guys, listen, Simon will be on my podcast coming up soon. But Greg, I'm curious, what's your preferred way to tie up a property before closing to get through entitlements and so forth?
Yeah, so I have a process that I use, and it depends on the size of the project and what you think it's going to take. You want a minimum of a 90-day, depending on what area you're in and how long you think it's going to take you, a 90-day to 120-day free look period. So that's where you go under contract, no earnest money, no obligation. You want 90 to 120 days to do your feasibility study. That's where you're going to, decide, is this project going to work? Run the numbers on it. Can you build what you think you can build? Just because it says you can get 10 units an acre or 10,000 square foot an acre for retail or office or whatever these, rules of thumb are, doesn't mean you can actually fit that on the property. A lot of nuances there to be able to understand what the capacity of your site is. So you need to spend some time figuring out, are the numbers going to work? Can I build what I actually think I can build? What is it going to take me to get through the process? How much is it going to cost? How long? So that's going to be that, and you need to have a little bit of understanding of this before you even go to a contract. You can do all this in an LOI and find out from the jurisdiction how long things take, but 90 to 120 days, free look. And then you want to go from that point, you're going to say, okay, I'm going to go put some earnest money up now that I've gone through the feasibility and I say that I want to go ahead and contract on this property and continue on through the entitlement phase. Now you're going to go to your entitlement phase. And then you want to give yourself whatever you need. Might be a year, might be 2 years, could be 3 years, depends on the project. You do not close until you get all of your permits. And that's basically what you say. We will close, within 12 to 18 months, as long contingent upon getting all our permits and approvals. I've got those contract documents. I think you, Simon and Peter, have them. If not, I'll get them to them when we're finished here so they can distribute that to you guys. I have an LOI and a contract sample that I use. You always want to run these by your attorney that has the specific language that you want to use for that entitlement phase. But that's basically it. Free look. Then you put earnest money down after your feasibility study free look period. And then you go into your entitlement phase. And that's however long it takes to get your approvals with free extensions. The other thing I put in there now, I've always done is you always get your earnest money back if you get turned down for any reason. If you can't get the entitlements, deal's off, you get all your earnest money back and in the deal. So that's the way I've always done it. That's the way I taught Simon and Peter to do it. They use this strategy and all my other clients. Does that make sense?
Yeah, thank you.
So we do not close on land. Matt, Matt was our broker on the Saco deal that we just closed. So we do not close until we can literally have machines on site the next day. I think we actually dropped off quite a few machines even before we closed. Before we even closed, we had permission. Matt got us permission on that one. So if I'm closing and it's my money, so on that one, all the deals that I've done so far have been joint venture deals. So Peter and I own properties. Mona owns 90% of everything else. The deal that we have with Anthony right now is it's a joint venture. We didn't raise capital in a syndication type model. Anthony will actually go through that tomorrow. But I'm not using anybody else's money, so it's my own money. It's Mona's money. I don't want my money going hard. It's in the bank right now at only 5-6% interest if you're in an Amex account. So why would I want to pay any interest on any money until I have equipment on site? So we literally have all planning board approvals, several meetings with planning board, and full permits in place before we had closed, which was just last Friday.
Yeah, and most sellers get that. And here's why this is important. Anything can and will happen all the way up until the point until you get those permits, and even sometimes afterwards. Things can still happen, but there can be a moratorium on development for any reason, run out of water and sewer capacity. I've got a client I'm working with in Florida that we got his site plan approved just under the deadline. They put a moratorium in place, no more approvals on, any new projects because they don't have enough water and sewer capacity. The planning board could change and somebody decides they don't like your project and they want to send you back to the drawing board. I mean, there's so many things that can happen. Yeah, this didn't happen to me, but a friend of mine was doing a storage project in Florida, and they didn't do an environmental study for um, endangered species, and they found these turtles on the back corner of the site, shut them down for 6 months because they had to mitigate all these turtles. So I mean, a lot of things can happen, before you get that permit, and then even afterwards. They'd already gotten the permit and they were in that process, and for some reason I don't know how they got through without doing that environmental assessment that they had to do for for endangered species. But anyways.
Hi, Greg. Quick question in regards to that feasibility period, 90 days to 120 days. I think originally, a little bit earlier, you mentioned you get an MAI appraiser. Do you get an architect and civil engineer also involved to kind of figure out exactly what you can envision or build in that lot or land?
Yeah, so it depends on your level of expertise. But yeah, during that feasibility study, yeah, you're going to have to engage potentially some people to just make sure that what you're doing is going to fit. And that's where you get, engineers and or architects, depending on what you're doing and where, to do, feasibility sketch plans. And those are generally, they'll charge you by the hour or flat fee. One of the best things you can do is develop really great relationships with your architects and engineers. I had one or two engineers that did all my projects, and they would do these things for me for free because I did so much business with them and I sent so much business to them. They would do that stuff for me for free. I know you have an engineer speaking, Simon, that may be here today, doesn't want to hear that, but anyways, they'll generally charge you just a small fee or charge you by the hour to do a feasibility sketch plan. But at the end of the day, you want to become an expert. You need to know by calling the planning department, researching the code, understanding before you even engage them, can you do what you want to do? What are the setbacks? What are the height restrictions? What are the floor plate area ratios? What are, parking requirements? What's on street, off street flow? What are the traffic requirements? What are the utility requirements? What utilities are available? This is all going to be recorded, by the way. So if I'm talking too fast, they're going to send you the recording so you can review all this. But those are just some of the little things that you have to take into consideration before you even engage the professionals, because you don't want to waste their time, doing the little details that you should, as a developer, either know and do yourself, or you have a team in place in-house that, does all your initial feasibility studies and things like that.
Greg mentioned endangered species, and Tyler in the back there is smiling, as am I, because we both have projects in New Hampshire where, God forbid, you move a spotted turtle, you actually have somebody that has to be on site and watch you move the damn turtle.
That one, right, the MAI appraiser is if we already have a site, right? Like then we determine the best and highest use for the land. But if, let's say, like coming from blank, then like how do we choose where like to kind of like invest, or let's say like how can we select like a land or like a site to do development or for anything?
So where do you find land? Is that what you're asking?
How can we determine a market, like if we start from zero?
So I'm not catching that. So how do you what?
So if let's say like when we start from the beginning, like I don't have any idea where to invest in, let's say like to build ground up. How can
Okay, where to
identify-
invest? So do you mean like what city and state, or what do you, is that what you're asking?
Yes, what city and state, and also like if we identify the city and state already, like if there are several choices, like how can we determine where would be the best site?
Okay. So if you're thinking about the area, so there's two things to keep in mind. Number one, it's always best to start where you are, okay, with the market you know the best. If you can start local, that's the best place to start, especially with ground up, because it is so technical and there are so many things that can trip you up. So you want to become an expert in your market or in a market, okay? So if your market's not big enough, and this is the other thing too, you need to think about what it is you're going to do. So if you're going to be limited in your geography, if you say, I just want to stay in, this metropolitan area, then you're going to have to broaden your asset type. So, if you want to build 200 to 300 unit apartment buildings, class A, you're going to have to spread out your geography a little bit because you can't build but so many in most areas. But if you want to stay in the same area, then you can be a developer of all kinds of things. So number one, you got to think about, what do you want to develop? Do you want to do multifamily, retail, this, that, and the other, or do you want to be what's called opportunistic, which is me? So that's where you fill the holes and fill the gaps. And the same thing kind of applies. You can take that on a bigger scale. So if your area doesn't have enough land or doesn't have enough people or whatever, your market's just not good for development, doesn't need anything, you want to find another market. You want to find markets that have the highest and best growth potential. You want positive net migration. So you want an area where more people are moving in than moving out, because that's generally going to be creating more jobs. Or you want to find an area, like Simon's market, where there's a big, demand. A lot of people wouldn't normally invest or develop in that area, but they don't have a lot of housing units. So there's a big demand, and he's got carved out a niche there in an area that most people wouldn't go. Like the Northeast is like, nobody wants to be in the Northeast. Everybody's moving south and west, right? And to the Sun Belt areas, in terms of where the population is. And you can find these demographic trends on like U-Haul. They have a great, the rental trucks, U-Haul rental trucks. They have a great website on moving demographics. And of course, you can just Google that now with ChatGPT. You can put darn near any question in there you want to know. What's the number one top, state in the country and city for positive net migration that's creating the most jobs, and it'll spit out like demographics and numbers and all that. So that's how you identify a market, and then you become an expert in that market. So how do you know where to do something? So once you've identified where you want to be, now you need to be an expert in that market. And it goes back to what I said earlier. What are the demographics? What are the income levels? What's missing in the markets? And for a developer, well, you need land. So where's the vacant land that needs to be developed? Where is there land for sale? Maybe there's an area, where the growth is trending, right? So most areas, like, let's just take, Orlando, Florida, right? So you got a major metro area there, and then all of the growth kind of goes outward, or Atlanta, Georgia, or Charlotte, North Carolina, or, Phoenix, Arizona, or Las Vegas, Nevada. You have all these major city metro areas, Dallas, Fort Worth area. Then you get the suburbs around that start growing, and that's generally where you're going to want to be, is in that path to development. Or you can become an infill developer, where you go into the big major cities and you look for either vacant land, or you look for what's called covered land. Covered land is, something that has future higher and best use development potential, but has something else sitting on it. Could be a small retail building that can go up 8 stories, right down in the city. So, you want to understand the nuances of where it is you want to be, what kind of density there is, and, start looking at these things. And it's going to be competitive. The bigger the market, the more valuable the site, the more, other developers are going to know about it, and it's going to be on their radar and they've looked at it. But as you start going out towards the path of progress, that's where you get more opportunities where, there's major subdivisions. Generally, where you ever see major residential subdivisions under development, there's going to be commercial parcels out front that are available for you to buy, and they're already done in terms of water, sewer, utilities. They're pad-ready sites where all you got to do is get your building approved, and you can take that down and build the building. So you want to go where the growth is. Another thing is you take these urban cores and you can do adaptive reuse. You can do redevelopment. That's kind of what I specialized in, was going into downtown areas and taking old buildings, could be warehouses, could be manufacturing sites, could be a school, could be a hospital, and redoing those and repurposing those into multi-tenant type properties. So those are the other options. So it really boils down to, you got to be an expert at what you're doing, pick a niche and go, be an expert in the market that you're going to, and understand where the growth is, and you want to stay ahead of that growth.
Anybody who's ever looked up what it takes to get a U-Haul from New York to Florida versus Florida to New York, just go put that into U-Haul's website and you'll see the cost difference, and that'll tell you where growth is going right now.
Mr. Greg, good morning. I'm Orlando from Central Florida, from Orlando. I have a question for you. Say that you are able to identify a piece of property, a piece of land where you know that you can develop something on. How would you go about securing that piece of land or putting it under some sort of contract as a starting investor, that most likely you don't have a lot of funds or anything, in a market where you are being competed by very experienced investors with, with a lot of resources.
Yeah.
Everybody
So
behind a piece of land. Thank you.
yeah. So the actual process, we already talked about that. So you've got the answer to how do you put it under contract and what does that look like? But as far as if you don't have the resources to take it down yourself, then you got to get the resources first. So you either need to find somebody you can partner with and you go hunt properties for them. That's kind of how I got started. I was a general contractor and I had developers that I would go find property and then I would bring them in and we would partner. So, there are, like you said, there's other sophisticated developers and investors looking for opportunities. So what you want to do is you want to be an expert at identifying those off-market opportunities. You don't want to bring them something that's been on the market forever. You want to find stuff that's off-market that has good development potential. You need to know who they are, what they're looking for, and then you go shopping for them. You tie that piece of property up under the contract that I just told you, because you can get that free look period with not putting any money up out of your pocket for 90 to 120 days. To bring that partner in, and you want to have a written agreement before you expose that partner to the deal. You want a non-circumvent agreement that they can't go around you and go directly to the seller. They have to include you in that deal. Again, it all boils down to you want to make sure you've got good people like Simon. That's how Simon and Peter got started, by the way. And Peter needs to tell you his little journey if he hasn't already. Peter and I started working together, I think, a year or so before Simon. He'd never done hardly any real estate deals, much less ground up. And then he got connected with Simon through my mentorship program. And Simon said, "Yeah, find a piece of property and maybe we'll do something together." Well, Peter came back like the next day, and here they are, 12 deals later, right? So you want to do what Peter did, and I would encourage you to sit down with Peter and say, "Hey, how does this work? What do you do for Simon?" You want to find a Simon in your market, and you want to be the expert at finding these deals and then bring them to these partners, and then you can expand with more and more partners until you get to the point to where you can do them yourself if that's what you want to do. Does that make sense?
Yes, thank you very much.
Hey, Greg. First of all, just wanted to say that we bought your course and just finished the development a couple weeks ago and had a lot of really great stuff in there. So first of all, thank you for that. Second of all, I wanted to follow up on the best ways to go about finding these off-market properties and who would be the best contacts within those local areas to go after.
Yeah. So as far as finding off-market properties, you got to go directly to the sellers. Now, there's some software that you can use. If you have the funding, you can use CoStar. There's one called Reonomy that you can use. There's also LoopNet. Well, LoopNet's going to have mostly listed broker properties, but you need a property database, software that goes in and gets tax database properties, and then basically the way you find these things is depending on what you're looking for. Obviously, driving around, pay attention to anything that looks like either vacant land that has potential or a covered land play. Like I said, could be anything. Any kind of building sitting on either land that's ripe for redevelopment or has residual and extra land where you can carve a piece out. Maybe it's a gas station on one piece and it's got 4 acres over here. You sell the gas station, you develop 4 acres, that type of thing. But at the end of the day, again, that's going to be a funnel as well. So, it's called farming, for vacant land. And you want to create a funnel where you send out marketing pieces for people to reach out to you. So it can be done by direct mail. You can do it with phone calling and cold callers. There's companies out there that specialize in cold calling for land specifically to see if people are interested in selling. Most cities and counties have a GIS website where you can kind of look at some of the parcels on there. Some of them have parcel data lists where you can download all of the real estate and then sort it out the vacant land. That Reonomy website is one that does that and has the ability to sort all kinds of different commercial properties and land and gives you the seller information or the owner information so you can reach out to them directly. And then putting the word out. So you want to have a website, all your social media, everything that people know that's what you're looking for. Hey, I'm looking for land. I'm a developer. I buy land in these areas. I'm looking for this kind of land. And then just make sure everybody knows everywhere you go that you're a land buyer. And that's literally how it works. And you can do it on whatever level you want to do it. I did most of my career, I did a lot of direct mail with postcards, letters, and then I did voice broadcasts when that first started. That's not super effective anymore, although Some people still use ringless voicemail, and it still kind of works, especially if you're calling somebody about their property to see if they want to sell it. But that's really basically the only ways to do it. And then networking with brokers. I get deals from brokers all the time that are off market. So a lot of brokers, they have what's called pocket listings. So they know about a potential sale of land that a seller doesn't want to list. And then you just, so you always want to network with brokers and let them know what you're looking for and where. And then tell them, say, look, I'm not looking for on market deals. Just only bring me the stuff that's off market.
Hey Greg, let's say you find a nice piece of land. What are factors that could come to light that are quite common that would kill development of land? Like you mentioned with one of Simon's properties, purchasing an adjacent piece of land and putting the driveway over there. Was that an elevation issue or a grading issue or?
Yeah, so he had to build a retaining wall that would have cost him about $3 million. And there was also, if water retention, I think, was the biggest issue. So I was like, look, buy this piece, use this for your storm water. It eliminates the need to build the wall. Then it opens up this back area because you get extra capacity for the storm water. If I'm right, I can't remember if that's what it was or not. And it was a few years ago. So that's kind of how that worked out. It was just, there was a problem. So whenever so real estate development is creative. That's why I love it, right? I'm a creative. And, there are rules, but you always want to look at it like a puzzle. How can I get more? How can I solve this? Why do I have to build this retaining wall? And so that's the kind of stuff that I asked. I mean, that was the first question. I'm like, well, why are you doing this wall? And then we looked at it. I'm like, well, here's this land over here. Who owns that? Let's buy that. So that's kind of how you want to do it. You want to look at it like a puzzle, be creative, think it through. How can we get more lots? How can we get more units? How can we get more parking? Whatever it is you need, or maybe an entity. I had one deal that I was working on where they wanted me to build this super expensive retaining wall. And, we were backing up to a street and I don't know, I can't remember what it was, but we ended up looking at it and questioning the city's assumptions on what they wanted us to build. And they had way over designed what we needed to build, and it saved $300,000 just, having my engineer question, what it was they wanted us to do. And I can't remember what it was now. It's so small, but you always question everything. If somebody says, hey, you got to build this retaining wall, or you got to put in, parking for this many cars, you got to have that many bathrooms, why is that? Where is that in the code? What's telling me I need to do that? And then, run it by your engineers. Is the county or city making us over design this?
All right, I just wanted to make a comment, Greg, on the last question where you asked about finding these deals, because since I'm working with Peter and Simon now, one of my responsibilities is finding deals. And I'm not a big social media guy. I don't love that medium. I think being in person with people is much more powerful, and I'll talk about that tomorrow. But I'll talk about some of the other things I do outside of sort of multifamily development. But I went and found a group of people who were in a specific asset class, and I put out what I wanted. I didn't go look to see what was out there that I wanted to buy. I actually put the word out and said on social media, on Facebook, I found a group that was specific for this asset. And I said, this is what I'm looking for exactly. And I had 7 responses within 10 minutes. And now I have a deal that I'm looking at now that's fully entitled, that they're doing the site work, fully approved for the asset that I'm looking at, and they need, quote unquote, need to sell it. I mean, that to be in that position is certainly powerful. So if you could build a social media presence, which I don't know how I built 5,000 people on Facebook, but it just kind of happened just by being on it. I think you have to be careful how much time you spend on it, but it's just a comment on what Greg already said, but it's certainly possible if you just put some word out to people that I didn't even know this person, and I don't know if I'll ever even meet him in person, maybe won't, but potentially buy his property already ready to go, shovel ready, which again, I'll talk a little bit about tomorrow.
Hang on one second before you drop the mic. Yeah, social media is huge. You just never know. There's tons of groups out there. There's meetups out there. There's a lot of places that you don't have to show up personally. You can just spend a few minutes posting here or there, LinkedIn, Facebook, Instagram, all of it, and just, interact. I mean, it's a networking game. This is a contact sport, right? Real estate is a contact sport. You got to deal with people, you got to make contacts, and you need to, keep track of those contacts. And, specifically for you and anybody looking for land, speed to lead. If you're putting a message out there and you're putting marketing out there and somebody reaches out to you, be on them immediately, because, you're not the only one, right? So, make sure that you speed the lead. And here's the other thing too. This is probably the most valuable takeaway you'll find from this meeting today, in addition to other stuff. But whenever you're talking to a seller or anybody about property, the last thing you'll always want to ask them is, do you have any other property you'd like to sell? Or do you know anybody that has any other property they'd like to sell? You'd be amazed at what comes up after that. Like, somebody's just talking to you about one piece. And I've had this happen to me over and over. Well, do you have any other property you'd like to sell? Oh yeah, I got 100 acres over here. I got this over there. And you're just like, what? So a lot of times we assume, and this is where I always go to asking deeper questions, right? So we always assume that when we ask somebody something, they're going to give us all the information. They're not, right? And you've heard the saying, we got two ears and one mouth for a reason. So when you're asking somebody a question, if something, that's a big one to end the conversation with. Do you have any other property you'd like to sell? Or do you know anybody that has any other property they'd like to sell? And then when you're talking to people in general and you're asking them questions, and if they say something and you're not quite sure what they said, tell me more about that. Well, why did you do this? Well, why do you look in that market? Why did you decide to build that? How did you get that approved? Just like you guys are asking me today with Simon. Well, what was it about that property? So always ask deeper questions and always be interested and listen, and you'll be amazed at how much information people will give you that you didn't even think about asking.
So a couple of very important points there. Speed to deal, I think it's extremely important.
Speed to lead.
Speed to lead, sorry. I say it's speed to deal.
And that's any business, speed to lead.
So on Thursday, Peter sent out 3 LOIs on properties we saw Thursday morning. By Thursday afternoon, there were LOIs. By Friday, we signed one on today, the PNSs. So land is very difficult to sell. So if you have somebody that's selling something and you're interested in it, get it under contract, get your due diligence period the way you want it, get it under contract, and then start looking at the details of it. So if you know that I can put on one of them's 100 units we can put on there. In the morning, Peter found out about it. By mid-morning, he already spoke to the town about it. Found out that they would give us twice the density if we had a workforce housing component to it. By the afternoon, we already had an offer in. So we also found out in the afternoon that they also had another offer in, but I think we're under PNS by the following morning. So you do have to bring a lot of speed to it. But also, just land is difficult to sell. So if they know you're serious, and they know the sellers know you're serious buyers, most of our leads today are coming from exactly what Greg said. At the end of every conversation, if it's text, I'm writing out. If you have any other deals you know about, let me know. If it's on the phone, we absolutely say that line. If you have any other land deals that you know about, let us know. 2 of those deals came to us from brokers that brought us other deals that didn't work out, but now they're bringing us land that was multifamily land. So it worked out perfect for us. So absolutely use both of those.
So brokers are good. Architects, engineers, they're good because they have clients that come to them with feasibility studies that don't do the deal. So, those are good leads as well. So you want to get a database of architects and engineers in your area and reach out to them. Hey, do you know of any land development projects? You can tell them what you're looking for specifically, or say, hey, you have any land development projects that you know about? We're looking for opportunities. Back to the speed to lead thing. That's huge. Speed to lead. The other one is making offers, right? You don't ask, you don't get. Make an offer. An LOI is non-binding. It doesn't cost you anything. Make offers, right? You got to throw those offers out there. And the other one is expired listings. So, you don't want a listed property because everybody's seen it. It's been exposed to everybody, but you want to target expired listings and withdrawn listings and then go after those. And, that's even for the brokers in the room. That's a great opportunity for you. That's where I got the most of my deals were expired listings. They've been on the market for a while. They didn't sell, maybe had a couple price reductions. And then I would go in after they take it off the market and put a deal together. And I've had architects and engineers bring me deals over the years. In fact, one of the best deals I ever had was my first subdivision deal. It was a 151 lot subdivision in Burlington, North Carolina. My engineer had a client that he was working on that project for. The client did not pay him. So he gave him the property in exchange for the fees because he didn't have the money to do the project. He called me up and said, hey, I got this piece of land. This guy didn't have the money to do it. He gave it to me because he couldn't pay me. You pay my fees and I'll give you the land. And I don't know, it was like 25 grand or something, and I mean, it was a long time ago, but still, might have been 100 grand a day. And I ended up, with my first major subdivision, just because my relationship with my engineer and knowing what I'm looking for. So, those are some of the things. And it sounds like a lot, but if you're doing this every day, all day, every day or whatever, it's just part of your daily routine.
Okay, great. In this day and age when people are getting bombarded by spam emails, spam texts, spam mailers and everything, again, if you find an area where you really want to get something going, how do you get their attention?
Yeah, so staying on them, and having relevant looking material that you send out, professional looking, professional sounding. You'd be surprised, when people like to talk about their property, and they will respond if you're, if they know you're serious. Make sure all your social media, if you're out there, your website looks good, put together, professional, consistent. So when people look you up, because they're going to look you up, they see a professional, reputable, consistent product. All your links work, your profile picture the same, the language is the same. Image is 100% of the game when you're doing these things. But I have several clients that's all they do is they do land entitlement flips and they do land wholesaling. So they go out and find land for developers and investors. You want to connect with those people, find out who's doing those types of things in your market. Those are good sources of leads. But as far as how do you stand out, you want to be different than what everybody else is doing. So if you're going to send out a marketing piece, send out a full 8.5 by 11, with simple language on it. Do you want to sell your land? Give me a call. One of my best mailing campaigns was you're sitting on a gold mine. Call me, and people were like, what are you talking about? So I mean, a couple of different ways you can stand out when it comes to mail marketing with a phone call. Real simple. Hey, this is Greg with Balin Development. I'm a builder developer. I'm looking for properties in, your market. If you're interested in selling your property and it's not currently on the market with a broker, please give me a call. That's important. You want to respect the brokers. And I always say that if you're interested in selling your property and it's not currently listed on the market with a broker, it would definitely be worth your time to give me a call. That always gets a response. It'll definitely be worth your time to give me a call. Language is huge, very specific, language. So, but those methods are still working. I've got clients all over the country that are doing cold calling, mailing at scale. And, mailing is probably a 1% to 2% response rate. Cold calling, probably 5 to 10% response rate. Leaving voicemails and sometimes getting people live. So it works. And that's how brokers get listings. They're doing the same thing.
One more question. AJ, start them off and finish them off.
Oh, thank you. Thank you, Greg. So this is a little bit of the life skills in the real estate market. So how to stay motivated most of the time when the projects are coming in and out, and one is stay motivated, other is how to handle the fear factor when you're jumping from, let's say, you're doing 1 million, 2 million, then the another project is 5 million, then the third is 10 million or 20 million. How to keep that fear factor down and your confidence and boosting high?
What are you afraid of?
Losing, failures, or investors' money.
Okay, so here's another most important thing you're going to hear today. You are all going to die. Every one of you. Every single one of us are going to die. Why would you not want to take the biggest shot you could possibly take in this life before you die? The most sad thing you could ever think of or imagine. You know what you want to be afraid of? Not taking your shot. Bigger deals are easier. It's easier to do a $100 million deal than it is to do a $1 million deal. Why? Because big money is looking for places to go to earn more money. Do not exit this life without putting your absolute, taking your shot, doing your absolute best, and understanding you don't have any limitations. There are zero. Simon never did a deal 3 years ago, ground up, not one. He didn't know what he was doing. Here he is 7 years later. Now he's smart and he had some finances and things like that, but he'd never done a ground up deal before. So there's nothing to be afraid of, even death. There's no reason to fear that, depending on what your beliefs are. But that's the most important thing I can tell you. You're capable of a lot more than you think you are. You have zero limits. If you get the education, you surround yourself with the right people, the right resources, and you take action every day towards your goal, there's absolutely nothing to be afraid of. If you fail, so what? You learn from it and you move forward. Not all of my deals worked out great, some better than others. But at the end of the day, the way you learn is just like anything else, right? When you first started walking, you fell down, you got back up and you kept going. The way you stay motivated is to think about that, right? What is it that you're doing this for? What's the legacy you're trying to leave? Is it your family? Is it, giving? Whatever that why is, you want to burn that in your head, and you need to understand every single day is one less day you have on this planet. So you might as well go for it and go big. And if it doesn't work out, you can always start over, right? It's not gonna end you, right? The worst thing that's gonna happen is you might lose a little bit of money. You might give a project back to the bank, whatever. That stuff happens all day, every day to people. You just take your hits and you keep moving forward. So what you really need to do is understand you're not limited except for the limits you put on yourself. That's it. The resources are out there, the education's out there, the opportunities are out there. You just got to get out there and look for them. And when you find them, you gotta move on it and take advantage of it. And don't be afraid of failing, because that's where the biggest success is found. A lot of times is in some of those challenges that you're going to face. And if you get the right education and surround yourself with the right resources, you're not going to fail. So here's what I want everybody to do at some point this weekend before you go home, and maybe Simon can lead you all through this exercise, is I want you to write down, obviously, your why. Write down your why. Why is it that you're doing this? Why did you come this weekend? Why do you want to achieve this? And why do you want to have this business and develop this business, whatever it is? What is your why? And then when you write that why down, well, why is that your why? What is it really that you're after, that you're trying to create? Yeah, I want to take care of my family and build financial abundance and make sure that generations are taken care of. Well, why do you want to make sure that's done? And then when you get to that why, well, why do you want to make, so drill the why down a couple layers, right? Because that's really important. You got to get at the heart when it comes to motivation, to where nothing will stop you. You won't be afraid of anything, and you will just get out there and take action. You want to have that why and drill it down multiple layers. Once you've done that, write down where it is you want to be. What does your business, what do you want your business to look like in really great specific detail? I want my company to look like this. I want to be doing these types of projects. I want to have this much money in the bank, this kind of revenue coming in, passive income, whatever those goals are. Write down that vision of where you want to end up in great detail. What does it look like? What do you look like? What does the office look like? What kind of car are you driving? What does your house look like? What is your family doing? Where are you vacationing? Write those things down. And then the last thing you're going to do is you're going to write down where you are now. Take an honest inventory of where you are now. Then you're going to compare those two. Where you are now, where you want to be, and there's going to be a gap. And then you're going to need to say, what are the 3 things I need in order to fill that gap? Who do I need to surround myself with? What type of resources do I need? And what kind of action do I need to be taking to get to that end result? Because I already know why. And I am not going to leave this earth without taking my shot because of this why. So once you have that, you'll know exactly what you need to be doing all day, every day, which will keep you motivated. Because when you're not motivated, you're distracted and you're not focused. But if you know exactly what you need to be doing all day, every day, and it's only going to be 1 or 2 things that you really should be focused on, everything else should be outsourced and delegated, except for 1 or 2 things that is really going to move the needle between where you are today and where you want to be, in 5 years, 10 years, whatever it is.